Hi, I'm attorney Gary Nutskin. I'm an attorney with Credit Repair Lawyers of America. In this short video, I like to discuss some things that can affect some people's credit reports who have filed bankruptcy. You see, 80% of all credit reports are damaged, and half of those damages are enough to depress one's credit score. The 7 things I'm going to discuss today affect just people who have filed for bankruptcy at one time. The first item that can negatively affect your credit report if you filed bankruptcy is an item that has been discharged in bankruptcy but is still being reported as an open balance in your credit report. Again, this is incorrect reporting. If the item's been discharged in a Chapter 7 or even reduced significantly in a Chapter 13, the reporting is incorrect and it does affect your credit score. The second thing that can affect your credit score is a debt that was modified in a Chapter 13 but is being reported with either the old balance and or the old payment. When you go through a Chapter 13, your debts are adjusted and the contracts you have with the lenders are legally adjusted as well. So if you owed $100,000 on your mortgage and you had a payment of say $1,000 a month, but after bankruptcy it was reduced to $80,000 in balance and an $800 a month payment, that's what has to get reported on the credit report. Many times lenders will report the old balances instead of the new balance and the new payment on your credit report. That negatively affects your credit score. The third thing that can affect your credit score is a bankruptcy that was dismissed. Some people file bankruptcy when there are barbarians, if you will, at the gate. There's some kind of enforcement action or imminent danger to their assets that they want to stop, and filing a bankruptcy stops all creditors from enforcing their actions. When the crisis has been averted, the consumer sometimes dismisses the bankruptcy. Unfortunately, in the public records section of your credit report, it's still going to state filed bankruptcy on such and such a date, and that's going to stay there for between 7 or 10 years. The other damage that can be caused to your credit report, and this is damage that can be fixed, is when trade lines of yours are reported as quote-unquote included in bankruptcy. That language has to go because there is no bankruptcy. The bankruptcy was never confirmed. Here's one some of you husbands are not going to like. When there's a couple, say a husband and wife, and if one of the spouses files bankruptcy, the bankruptcy can sometimes get reported erroneously on the other spouse's credit report. Let's say there's a husband and wife, they have a house together, husband files bankruptcy, wife doesn't. If the bankruptcy is reported on both the husband and the wife's credit report, that's wrong. It should only be reported on the husband's bankruptcy. But here's an interesting twist. Remember, they have a house. They're probably jointly liable on that obligation. So that trade line, which is being reported on both the husband and the wife's credit report, is going to be reported as included in bankruptcy. Some creditors who look at these credit reports and don't look at credit scores might get confused and see the wife's credit report says included in bankruptcy, and they might wrongfully conclude that the wife filed for bankruptcy. A fifth thing that can damage the credit reports of people who have filed bankruptcy are post-bankruptcy payments that have not been applied to the debt. Bankruptcy really messes up some creditors. I'm not talking just large banks. I'm saying even some smaller banks that give personal attention, it messes them up too. So when they receive payments after someone has filed for bankruptcy, they're sometimes not sure what to do with that money. They'll post it to what's called a suspense account. And this doesn't happen all the time, it happens just sometimes. But because it's posted to the suspense account and not credited to the account that you owe, that balance doesn't go down. And again, that's a problem. It shows your balance is actually higher than you really owe. A sixth thing that can affect your credit report after you file for bankruptcy are late payments reported by a lender after your bankruptcy has been confirmed. This happens mostly when people file Chapter 13. They're awarded a new lower payment and a new lower balance. And while the consumer makes that new lower payment that was ordered by the bankruptcy court, the lender may still report you as late month after month after month because you're not making the full payment, the full original payment. That's illegal. That clearly damages your credit score. The seventh item I have for you today of something that can affect your credit report if you've ever filed for bankruptcy is a lender that wipes out your balance and your payment on your credit report. They'll report that you have a zero balance due and you have a zero payment. Now, you might rejoice and say, that's wonderful. According to my credit report, I don't owe any money. Well, don't jump so high for joy. You see, if you're making payments on this debt, that debt should be going down. Otherwise, if someone who looks at your credit report sees that there's a zero balance, as I stated before, they might think that you totally wiped that debt out. And that doesn't make creditors happy. They like to see people that even if they have to file bankruptcy, they made an effort to repay as much of the debt as they could. A zero balance and a zero payment just do not achieve that goal. I'm Gary Netskin. I'm an attorney with Credit Repair Lawyers of America. And if you have any items or issues on your credit report that don't belong to you, or you've ever filed bankruptcy and you're curious about some of the issues on your credit report, call us for a free no obligation consultation. Thank you.